Hello, welcome to European Open briefing for Tuesday, June the 5th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar is eyeing the 110 level against the Japanese yen as the greenback continues to make gains on the back of improving risk appetite. The euro, though, is struggling to move past the 1.17 level. It has now slipped back below that level, and the pound is also unable to extend its gains. It has now retreated back towards the 1.33 level against the dollar amid fresh concerns about Brexit. The Australian dollar has eased from 6-week highs following the RBA policy meeting, where the central bank in Australia maintained their muted outlook with regards to inflation, and oil prices, at least US crude prices, crashed to 2-month lows yesterday amid speculation that OPEC will ease its output restrictions. Let's get started now with the US dollar. We can see dollar yen continuing to trend higher. It briefly touched the 110 level. That's a 1.5-week high. It's now currently trading around 109.80. So we are seeing a strong rebound in US Treasury yields as those the risks regarding the political crisis in Italy continue to subside, even though we do have lingering trade tensions. For the moment, though, investors are focusing on the strengths of the US economy following the jobs beat in Friday's non-farm payrolls report. Yesterday we saw a second day of strong gains on Wall Street. The S&P 500 closed at a 2.5-month high, and the Nasdaq made a fresh record closing high. In terms of US data, the focus later today will be on the ISM non-manufacturing PMI, but it will be fairly quiet. We're not going to see any Feds because this week, due to the blackout period ahead of next week's FOMC meeting. If you look at dollar index, it's looking very neutral at the moment. It's been trading flat in recent days, unable to match the uptrend of the dollar-yen pair, and the main reason for that is the recovery in the euro and the pound, which now appears to have stalled. We can see the euro yesterday peaking at $1.1744. It's currently and it has since retreated to hover around the 1.17 level, currently trading at 1.1690. Sterling yesterday rallied to 1.3399, just shy of the 1.34 level, but then fell back sharply to around 1.33 before firming slightly to 1.3315 at the moment. So although we do have those receding political risks in Italy, with investors now seeing a very low probability of Italy exiting the Eurozone following the selection of a more pro-Euro economy minister by Italy's coalition parties, the Euro is still being weighed by a somewhat gloomy outlook with regards to the Eurozone economy, especially in comparison to the US. In the UK, the pound had been boosted in recent days from the PMI beat for the manufacturing PMI and the construction one as well yesterday, but we are seeing now renewed Brexit concerns. It's being reported that the UK government will now not publish its detailed Brexit blueprint before the EU summit at the end of June, because it won't be ready until July. So this has raised fresh concerns about the UK's preparations for Brexit, as well as about Prime Minister Theresa May's leadership. In terms of UK data, we're going to have the services PMI coming up later today, so that may provide the pound with some support if it comes in as expected or better. Let's now turn to the Australian dollar. We did have the Reserve Bank of Australia policy meeting earlier today. They kept rates unchanged as expected, but they also maintained the outlook that inflation and wage growth will only recover very gradually. So we saw the Aussie retreat slightly to around 0.7640. Yesterday it had reached a 6-week high of 0.7666 on the back of strong economic data out of Australia. So those upbeat numbers have led investors to raise their forecasts of GDP growth for the first quarter from 0.8 to 0.9%. Those numbers will be released tomorrow. Today's numbers were a little bit more disappointing, though. We had a larger than expected current account deficit for the first quarter, and net exports contribution, although it was up from the prior quarter, it came in slightly below expectations. So that perhaps explains why the Aussie was unable to extend yesterday's gains. If we have a look at the Kiwi has been rising pretty much alongside with the Aussie on the back of that improvement in risk appetite since Friday. We have the global dairy auction coming up later today, so that may provide some volatility to the New Zealand dollar later on. And finally, looking at oil prices, we can see a big drop since the middle of last week. We can see WTI crude oil currently trading around 65, just above the $65 a barrel level. Yesterday it had fallen to a 2-month low of 64.57. Brent crude hasn't fallen as much, but it did make a low of $75.20 yesterday. So all of these losses are mainly due to expectations that OPEC and non-OPEC will decide to relax the output restrictions when they meet on June the 22nd in order to compensate for supply shortages from Venezuela and Iran. We also have rising US output, which is also weighing on the market. On the other hand, we've got the API weekly inventory numbers coming up later today, to be followed by the official government inventory figures tomorrow. Those are expected to show a drawdown in US crude stocks, and if that's the case, we might see prices rebounding further in the coming days. Looking at today's economic calendar, we just had the Eurozone PMIs, the final readings for the services, coming very close to the flash readings. The UK PMIs will be out shortly, and in the US the focus will be on the ISM non-manufacturing PMI. That's it from me. Thank you very much for watching, and have a great day.